updated it a little bit since you saw it last.
All right. So, hi everyone. Thanks for joining us today for this fireside chat with our covering analysts. We have Glenn Stanford here, the founder, chairman, and CEO, and Jeff Whiteside, CFO and Chief Collaboration Officer at eXp World Holdings. We're live in Las Vegas, webcasting this at EXPCON, and just taking about 30 minutes or so to discuss some of the key announcements that we've made at the conference. As you know, we're in our third quarter quiet period, but happy to answer a few questions following. So I'll kick off the discussion in a moment, but before I do, I'll begin with a review of the forward-looking statements. There'll be a number of forward-looking statements made today that should be considered in conjunction with the cautionary statements contained in the company's SEC filings. Forward-looking statements are subject to various risks and uncertainties that could cause our actual results to differ materially from those statements. Please see our filings with the SEC, including our most recent quarterly report on Form 10-Q for a discussion of specific risks that may affect our business performance and financial condition. We assume no obligation to update or revise any forward-looking statements or information. As a reminder, this call is being recorded and a replay will also be available on eXp World Holdings. So with that, I'll kick off. Glenn, wanted to just talk to you about some of the announcements that we've made at EXPCON. We've had quite a few that we've made today and yesterday, and wanted to ask you which ones you're most excited about and which ones we're sort of focused on.
Well, we had a lot, and I actually don't know all the announcements we've made because there's been a lot going on this week. But this week is our big event that we do every year for all of our agents and brokers. And this year we have over 6,000 of our agents and brokers in attendance. We have at least 12 countries represented in terms of attendees, and so here we've announced some things around education and training. We've formed a relationship with a company called Agent Academy, which we're really excited about. The coaching and training space for us has always been something that we think is going to be, from an investor perspective, a very valuable add-on to the real estate brokerage. When we look at other brokerage models, specifically, Keller Williams, we look at the amount of income that they generate in helping their agents succeed at a higher level through their coaching and training programs. We have the Success brand. We think that as we help agents increase their production, we're going to be able to build a very sizable coaching and training business that over time should be in that $50 to $100 million range. That's high margin business, and it'll take a few years for us to get there, but it's a nice business to get into, and that's just with our own agents and brokers. So that for us is a big part of it is the things that we're doing around success training and coaching, and how that sort of attaches to the business model. We've also done another announcement that went out earlier today around our success health division, and so that one is pretty exciting. One of the fastest growth areas in coaching is in actually the health and longevity space. So biohacking, things to do with biomarkers and helping people increase their health span and, in theory, increase their lifespan. And so for us, that we think that's another piece where success can be a thought leader and actually can drive a lot of eyeballs and just to help people be healthier. Mm-hmm. And so we've got some things that are going on there. There's a number of other announcements we are working on. We've got some announcements that are somewhat quieter, where we're doing things with organizations like the Tony Robbins organization, and we've got some of the others that maybe even you might note that I haven't noted because I've been in meetings the whole time.
Yes. So luxury, that's another announcement that we made this today, actually.
Yeah, we did. Yes. Mm-hmm. So luxury was another addition to what we're doing, and we've been making a ton of progress on building out a luxury deliverable for our agents. That's something they've been asking for quite a bit. And so that's another exciting piece of the model that we think will make it more attractive, especially at the higher end of the market. So we can bring in some of those agents who love the EXP business model, but have been asking for something that addresses the clientele that they go after. So that I think is going to be something very helpful to attract that higher end agent.
Mm-hmm. And Revonos was another one that.
Yeah, and Revonos as well. In fact, we've got Leo Perea here who heads up Revonos in the room with us. But that when we think about attached rates to mortgage, title, escrow, other services, lead generation, and anybody who's been a long-term shareholder or has been followed the company, the brokerage itself is a very thin margin model. That's just the nature of the beast. We think that there's ways to generate an extra point or two by getting more efficient in the model of just running the transactions. But we think about the reason why we focus so much time and attention talking about market share is because we believe that market share is a better way for long-term profitability for the brokerage because of all the other services that can be driven through the platform. We had Joe Skoosen, I think is his last name, from Inside Real Estate. And so we use a platform called KV Core. We have 42 million customer contacts that are actually in our agent's database in KV Core. We're getting ready to roll out apps into the iOS and Android marketplace that's actually attached to these 42 million clients. We have 10 million listing alerts that are active in the system, and we've got hundreds of thousands of communications going on every month with people through that platform. So some of the things we're looking at is how can we actually drive attach rates inside of that app into affiliated services, mortgage, title, and escrow, et cetera. So we're continuing to work on what that looks like, and that's a lot of that's in Leo's domain, but a lot of it is our partners are bringing us opportunities that now we can start to monetize with our agent base.
Mm-hmm. Great. Another thing we talked about is 85,000 agents that we announced that earlier today. You just talked about market share. Maybe there's some comments that we want to talk about in terms of what is going on in the market. Obviously, we're growing agents. Market's changed a little bit since the beginning of this year, and so what are we seeing in terms of our agent base and what we're offering them in terms of support?
Yeah, so we're still growing. I mean, the fact that our agent count is going up. Most real estate firms are seeing their agent count actually going down at the moment because of the interest rates that are have jumped dramatically up into that 6% plus range, up from less than 3% at the beginning of the year. That's created a significant slowdown in the overall housing market. I know that when we were at the D.A. Davidson event, Jeff and we talked about on the webcast that we previously talked about was that we were looking at single-digit growth in the volume of the business toward the second half of the year, and that's still what we're sort of still seeing is not the massive growth, but our agent base is still growing. Mm-hmm. Just right now, our agents are actually doing fewer transactions per agent than normal because of the macroeconomic conditions. So when we think about market share, we still think about adding agents. There's attrition going on in the industry in general, but we're continuing to pick up market share. So when the market does shift back into a more normalized market and eventually a growing market again, because they all go in cycles, we're going to be a great place to capture that business as it picks back up.
Mm-hmm. Sure. Jeff, did you want to make any comments?
Yeah, I mean, what we talked about in August, at the conference is pretty much what we're seeing, and we're also seeing that there could be some kind of seasonality in the fourth quarter. Like, who knows? Right? It's such a crazy time, but it seems like the slowdown, there is a slowdown in the marketplace, no question about it. We said we're growing through it, but we're growing through it at rates of 10 to 5%. Is it what we talked about originally? And that's kind of what we're seeing. I'd also add that back in August we talked about adapting or adapting the cost structure to reflect the volume, and we're doing that. All right, so we've taken action. We are taking action, and as time goes on, we'll continue to take action to match the transaction costs with what we're seeing in volume. So we'll see some of that benefit this quarter, a small piece of it, but we're going to see most of it in Q4 and early next year.
Great. And so, in terms of the things that we're doing now, in this market to help agents, what's been the reception on Success Health, on coaching, and the general interest in taking advantage of some of these things now that they have time?
Yeah, so I think there's a couple things. One, we do have a lot of agents who built up a fairly decent financial position because of their involvement with EXP, and so some of them are in a mode of wanting to do something next in their career, not just list and sell homes and attract agents, even though that's how they make their living, but how do they then level up other parts of their life. So that's where the Success brand overlap is a really powerful tool for us. We've definitely seen probably this event, of all the events we've done so far, we've seen how powerful that brand has been in terms of the enthusiasm around our alignment with that brand. So when we talk about helping optimize our agents' biometrics, whether it be with a Whoop, or whether it be with an Oura Ring or their Apple Watch, or we think about internal nutrition with our partnership with Biome. All this is around helping agents be better versions of themselves. And so they're really, we just came out of an event. There were a few hundred people in the room, and virtually all the room basically said they wanted to sign up for a Success Health coaching program, at $299 a month. And so obviously we're probably, we certainly don't expect 85,000 agents to sign up for that. But if they did, just that high margin element of the model would dramatically change our income profile. So and if we think about Biome, we make a small amount of margin on it, but if we could get 10,000 agents on Biome, we've got 9,000 agents on our eXp healthcare initiatives, but if we had 10,000, that could add another $2.5 to $3 million of drop through net income. So you start to look at how all of these little pieces could create additional margin by enhancing the agent's life. Those are the types of things that we're looking at now.
I went downstairs, just by the way, to the convention center, and there was a big line of agents and me that signed up for the Biome kit and the monthly program. So I think they're pretty enthusiastic about it. And just in terms of Success coaching, how has that been going? I think that's another announcement or a feature that we added earlier this year. Not so much here, but wondering about how enthusiastic agents are about expanding into being coaches.
Yeah, so we do run as a very agile company, which means a lot of times we launch and announce and actually formalize in very short periods of time, just to see what the traction would be, and then we improve it. And we're really on the cusp of seeing a number of people have went through our Success certified coaching program. A lot of people, not just EXP agents, want to be Success certified coaches. So it's not isolated to EXP agents. Anybody who's in that life coaching arena, we do. That's $5,000 to become a Success certified coach. But that brand is so powerful. People want to become Success certified. So. And then we've got people who want to do either group coaching or one-on-one coaching, primarily real estate related, holding them accountable to their real estate goals and ambitions. But we also have people that are wanting to sign up to be actually held accountable to longer term health and wellness goals. And so we're seeing that ecosystem really take on some neat traction. And so when we think about what that looks like, again, talked about earlier, we think there's a path to a $50 to $100 million opportunity in the next few years, just in the coaching and training division of Success.
Great. And I don't think people understand or fully appreciate until you get to a conference like this, all the micro communities and support that that agents get from their groups, right? So there might be a team where there's a big influencer who's brought on other agents, and those agents learn a lot of things from their sort of mentor, if you will. And so coaching seems to be a bit of a natural progression from there, learning what they can from their internal team, and then moving on to more professional coaching.
Well, I think it also makes them a better agent attractor, even if they're a Success certified coach. So, if agents are looking to join EXP and they're working with somebody who actually understands the mechanics of helping somebody perform at a higher level, they're going to be more attractive from just a who do I want to be brought into the company by? Because there's a lot of responsibility that's on the shoulders of the attractor to help the person that joins succeed. Obviously, EXP takes that role on as well, but because of our comp model, a lot of the roles that a typical branch manager would take on from a training perspective, especially when it comes to just straight ahead core motivation, a lot of that comes from the upline in the revenue share system.
Mm-hmm. Great. Do you have any questions?
Just a couple things I'd add is, at the same time as the market's going to do what the market's going to do, we're spending a lot of time from an operational standpoint. So we brought in Patrick O'Neill to run the brokerage. And, I think we're going to get the benefit from his experience and, the way we'll get into that economic unit cost. That's what we're working on. So we're doing that in the interim. Technology is moving pretty fast right now with ShowWeb in place. So we've added to leadership in a big way. As you know, Leo's here. And so there's a lot of stuff going on. So as the market does what it's going to do, the company's really working hard to be ready to take advantage of all these situations on the other side. And then the other thing is that, I talk about this network effect. Okay, so when I first came, there was like very few large influencers. This is actually the proof when you come to this conference. You literally see hundreds of really strong growth people, and that's what you're seeing here. So it's real positive. I think we're seeing, the feedback that we're hearing is a lot, especially the independent brokerages are looking for a place to go. There's a number of them that are here right now, and that, everything seems to be very positive. And I think from my experience, we're not getting the same kind of pushback, and you can talk to this obviously, Glenn, but we're not getting the same kind of pushback that we got in the past from a lot of these big established brokers and agents.
Yeah, one person who just joined us here this week is our new Chief Marketing Officer for Success, Tristan Amuda. He runs the largest social network for real estate professionals that exists called Lab Coat Agents, and he just made the move over. And so we're attracting some really big influential people to EXP. And then Courtney Chakaran, actually Courtney Keating, she's now the Chief Operating Officer at Success. She's been over there working on Success all over the organization, piecing things together over the last 1.5 to 2 years. And now it's made it easy for me to move in and help galvanize in some different ways to market over there. So we've been moving people around, but Tristan was a great get. He was, for a lot of people, felt like he was fairly untouchable in another system. And given that he's come over, that's certainly created a lot of interest from people who have been watching him.
Great. Did you have a question?
Yeah, thanks. Tom White from Davidson here. Jeff, maybe just to circle back on the comments around kind of expense growth, can you just remind us what you said about maybe quantifying like the moderation in the G&A growth over the next few quarters, and then how kind of durable is that? So I think you've kind of moderated the growth because of what's happening in the housing market and the little bit of a slowdown on the agent ad side. If the agent ad stuff picks up again next year, are you going to have to ramp G&A back, or is this stuff going to be kind of more durable in terms of?
I mean, so we were running at about $80 million SG&A in the first quarter of the year. I mean, that's gone up for a number of reasons, some investments. All right, so we've taken care of some of that. You know, we're going after about a $40 million from where we started the year to where we're going to end the year from a planning standpoint. You know, we brought that SG&A number down about $40 million based on the growth or the lack of the slower growth of the business. Okay. As time goes on, we're going to be able to see, you know, what happens. You know, what happens in the fourth quarter, what happens in the first quarter of next year, and we can adjust that again. But as we showed through COVID, we can adjust it back. But I don't think, to my point earlier, I mean, we're going after productivity in a big way. I mean, so we're going through the entire organization on the brokerage side, and I think we're not going to be able to have to add back like we've done in the past, like post-COVID rebound. So that's kind of where we are. We've had some costs associated with the moves that you're going to see in Q3, and you know, we'll start seeing benefit really in Q4, Q1 of the lower cost structure.
That's great. Maybe I'll ask one follow-up. Revonos, maybe this is for you and for Leo, but Revonos, can you just talk a little bit more about what that is? And it sounded like maybe you think that's a way to kind of solve or optimize for ancillary attach rates.
Yeah, why don't I pass the microphone down to Leo, and Leo can kind of address some of that.
Thank you. No, I would say the first goal with Revonos is to strengthen attraction and retention, especially going into a softer market. Having corporate generated lead gen when agents are struggling to maybe get the same level of transactions is something that's very appealing. As I shared in the last time I joined the call, having just kind of studied the legacy players, you look at some of the effective things they've done. Realogy has always managed to get quite a bit of a loyalty from their agent base through their Cardis unit. So that basically is what we're doing here. And we want to make it more interesting by having a wider breadth of partners. But I'm really focused on relocation, REO, which may or may not come back in a bigger way, affinity partners. And also one of the things that I've learned in my time here is that we are very attractive to institutional partners, whether it could be hedge funds that own single family homes to portals, because we are the largest monolithic independent broker. So if they were to call one of our competitors, they're dealing with 600 franchisees versus we are one corporate entity on one transaction system that allows us to be an easy button in order to be able to deploy solutions at scale.
Can you just, you mentioned single family rental. I think I saw a stat the other day that like over the last year, like 1 out of 5 homes sold went to an institutional buyer. Like, what is that? Can you touch a little bit more about like that opportunity? Like, what could that be for you?
Yeah, no, absolutely. And that stat will ebb and flow, right? So I think they've been on pause for about 60 days. But whether it's the acquisition or the disposition, I think we become a very interesting easy button for folks. And those are a lot of the calls I'm investigating right now.
So just moving on in terms of, what we're seeing in terms of being able to be a larger agency, right? Brokerage that has scale. And what does that offer the agents that are here and the new agents that are, coming, and those that maybe haven't been through this market before? What are they able to gain from EXP?
Yeah, so obviously we've got a unique comp model in terms of the way that we've built out the model. One of the things is that the real estate industry does have a fair bit of turnover every 5 years or so. You can sort of think about the idea that 60 to 80% of the whole agent base that exists will have turned over, and so there's always an opportunity to basically grow a business inside of the EXP brokerage platform. So agents can join, they can build that. But as we mature as an organization, our training gets better, our onboarding gets better, our ability to help agents be productive day one gets better. And this will be, in my opinion, a moat that will be harder for smaller franchises to sort of overcome, because they're single offices and they basically have the best training by the best person in the office, versus having an ecosystem that's actually built to help agents succeed. So a lot of these things that we're doing and partnerships that we're building is to really give our agents a competitive advantage, whether they attract an agent or not, whether it be on the luxury side, whether it be on the technology side. And so as we continue to grow, and then, things like Zoocasa, which we bought earlier this year, as we build out our own internal portal that's exclusive for our agents, and we also build out other exclusive partnerships. And one of the things, as Leo mentioned, being the largest single brokerage allows us to bring in opportunities to our agents that they wouldn't be able to get when it has to be sort of figured out at a local level, and then figuring out whatever that economics needs to work out. We can work it out very quickly and actually then bring it to our agents to give them those tools and those advantages. So I think for an agent, it's going to become more and more attractive. The other challenge is in a down market, not so much for us, but in this down market, we're seeing a number of boutique brokerages, small independents, or those who are the franchises have ended. We're seeing a fairly large number of brokerages look to convert their brokerage to EXP, because their cost to operate is technically lower, and their income inside the EXP ecosystem is actually better than continuing to run their brokerage. So the broker owner gets better economics inside of EXP, moving their brokerage over, than trying to continue to run it and try to figure out how to support their bricks and mortar and their staffing costs necessary in a slow market. So that's a pretty consistent theme that we're hearing a number of brokerages looking to make the conversion, and a number of those are sort of in flight as we speak.
Mm-hmm. How long does that take to onboard some of those? Does it take years or?
It normally doesn't take that long to do the onboarding. It really comes down to if they have other businesses. So if they have a property management business, we don't do property management, so we have to figure out a solution for that. If they've got, maybe they have title or an escrow relationships or mortgage relationships, how do they preserve some of those economics? Can they do it? In some states they can, some states they can't. And then so how do we overcome some of those elements of the model and help them? So everyone's a little different, but there's a lot of them that don't have those extra pieces, and so for them it's really just a matter of moving them over. Quite often their agents get a raise when they come over. So quite often their agents are on a 70-30 split or something akin to that, and they move over and they're in an 80-20. And so you think, well, we're collecting less money, they're not getting the economics, but they're able to hopefully get out from underneath their office expenses. The single biggest cost to run a real estate office is the physical office, followed closely by the redundant staffing costs. So every office has the same people. It's got a receptionist, bookkeeper, sales manager, broker owner, and if they have a physical office, they have somebody that has to come in and fix the copier. We don't have any of that. So for us, they're able to get rid of a lot of that cost, give their agents a better opportunity, and they get a better opportunity as a result.
Sure. Pause, see if anyone had a question. Great. One thing you mentioned earlier about luxury was part of the reason that we launched that was to attract some of those groups. How is the luxury offering different than and how does that appeal to those folks that are in the luxury market?
I think, Courtney, you worked on the luxury piece a fair bit.
I mean, to be clear, we have a lot of luxury agents, right? Mm-hmm. And a lot of what these luxury agents do is they're coming over and they're experts at what they do. But what we haven't had that other brokerages, other competitors have had is very specific divisions to do this. So we got together, we did a lot of what I call as voice of agent to understand what's really important. And what we're hearing is that when people join and they're part of that segment of luxury, they want community. They want to be learning from other luxury agents. And this goes right back into coaching and mentorship and how do we put together something specifically for them. Because like I said, attracting luxury agents isn't really the issue. It's making sure that people, as they go through their learning, their development, continue to level up their skill set. So the components of this program, obviously there's some branding, right? You know, you've got EXP Luxury, but it's about the community that's being created. It's how we're allowing them to connect with different assets that we've got across the organization. There is a platform that's being used that'll help them with marketing collateral. A lot of these agents come and they are used to having very bespoke materials, things that are done concierge type services. So we're testing into all of that, but it's really built on what our agents have said they want and need.
Great. Do you have a question?
I'm sorry. Just on balance sheet, the last few quarters, you guys have talked about trying to manage to kind of at least $100 million in cash.
Yep.
Had sizably above that last quarter. Obviously, the housing markets is what it is, but you're also getting more efficient. So I don't know how you're thinking about, maybe deploying that cash balance. Maybe you want to keep it around in case the market stays bad really, really long. But
yeah, I mean, one thing we did do was we did pull back on the buyback. All right, so our cash balance is very healthy. Right, so there's no specific reason to do that, but we wanted to make sure if this was going to go on something severe in the first couple quarters, don't know that's going to happen, but just in case. But we're still doing a buyback of $40 million. All right, so and we don't see any need in any kind of near-term future at all of raising any kind of money to run the business. So it's still a very healthy balance. We'll still be over $100 million in any kind of foreseeable future.
what about sort of M&A? I guess maybe it was sort of where I was going.
I mean, we're looking all the time at different deals, and they obviously it's got to have the agent value proposition that's going to make a big difference for us from a margin standpoint over time. But there's nothing that we're looking at that's going to be massive or big. I mean, one thing that we didn't do, and in hindsight, I think it was a good decision, to go after some big mortgage business. We had a lot of pressure on us to go after those kind of businesses, and we didn't do it. So the mortgage, we're still working the mortgage very hard, but that's turned out to be in hindsight, a good decision not to do that. But we're feeling very good about the cash balance that we have, and we don't see any kind of need in the short term for any capital raise.
On mortgage, since it was just brought up, what do current attach rates look like, and what do you think they can be? I know Success Lending still somewhat in the early days, but they seem to have pretty good geographic coverage. Just curious on your thoughts when it comes to mortgage and attach rates.
Yeah, so at the mortgage side, we are getting more mortgages into the system, but still, for the most part, just a rounding error in terms of the attach rate. We're still getting that footprint. We're still getting the loan officers in place, and we, the way that we've looked at it is it's a long play for us. So we're not expecting it to, meaningfully impact our income statement for a year or two. So just because of the long ramp cycle and the infrastructure that we're going to be building out. So right now it's still pretty small, and quite frankly, what we're hearing and what we're seeing is that mortgage applications and people going through with mortgages is down pretty substantially. There's actually a fair number of cash buyers in the market, so a lot of the activity is really around the cash buyers. But the mortgage side, it's slow at the moment, but that's mainly because of interest rates jumping as much as they have.
And will there be any incentives in place to encourage agents to refer to Success Lending?
Yeah, so we're working on the things that are RESPA compliant. So the Real Estate Settlements Procedures Act actually prevents us from paying an agent for a referral in a mortgage company, and so that is part of the backdrop that we have to work under. Now, there are ways for, and there are large real estate teams that own pieces of their own mortgage company. And we're seeing, are there ways to partner with the larger agents, setting up some sort of quasi internal mortgage company where maybe it's in a marketing services agreement where there's co-marketing, where the mortgage company is featured prominently in the advertising, and as a result, they can co-market, and that results in money coming in they can use for additional marketing to grow their real estate practice. So that's typically how things can be done. But there's other ways that we're working on. I think there's some internal loan officers for success lending and some large teams that have already been put in place with some MSAs in place.
Okay.
Any questions?
Yeah, a question on agent growth. You mentioned, 85,000 and you just launched in Chile. Can you talk about the mix of where agent growth is coming from international markets versus domestic markets?
Yeah, so international is growing rapidly, but it's a small number. So I think, the agent base is growing. In Canada, we just announced we're over 5,000 agents. I think we're somewhere around 74,000 agents in the U.S. So that puts us at, a little over 10,000, 11,000 internationally. And that actually includes Canada.
Mhm.
So that's where we're at presently. We actually do want to create more transparency around those international growth numbers, because in country, we in South Africa, I think we have 800 agents now. I think in India, we have 1,500 agents. In the UK, we have over 300 agents. So we want, in each country, there is definite numbers that they know in their markets and the markets know.
Sure.
So we want to create some more transparency around that, so you don't have to dig as
Yeah.
much.
Are net agents in the U.S. still growing?
I believe they are. They are. And so we are growing agent base here. I think because of interest rates growing so fast in the U.S. specifically, that did slow down our U.S. growth fairly quickly. But most of that is in the non-producer categories. So our churn is really in the low to no producer. Our producing agents, we're still super, super sticky. Like, agents don't leave EXP once they're with EXP. We lose the occasional agent, but it's, we don't have a lot of churn in the productive agent category.
I had a follow-up question to that. As other brokerage models emerge with, maybe a slightly more favorable commission split to the agent, how is that something that you guys are thinking about from a competitive standpoint? So maybe someone does 85-15, for instance.
Right. So the way at least the way I think about it, and I think the rest of the team thinks about it as well, is we want to build a model that's sustainable for both us and the agent. And the new models right now are running at effectively a loss. And so we think about the idea that we broke through where we needed to break through, a few years ago, so we can actually run this company for the long run for our agents without changing the model. Our belief is, because we understand the cost to run a brokerage, is that they will have to change their model in order to actually be profitable. And I think there's always going to be people competing for that next level of brokerage. So right now there's 4 or 5 companies that are competing with almost the identical model. I think the largest one has 6,000 agents, and then there's a number of them that have 1,000 or 2,000 or so forth. So there's going to be a fairly large number of people competing for second place.
Mm-hmm.
But I think our first mover advantage is and the way that we're building our competitive moats, we'll just continue to garner market share.
That makes sense.
We've seen, we did see actually earlier in the year some competition coming on with the transaction fee only, right? And so that caused a lot of stir until all the transactions started going down, 37%. So that model kind of breaks if your transactions aren't growing.
Yes, so that's a good point. Some of the noise that we had and some of the noise that you're hearing from an investor perspective, when it first showed up, even on our radar, we took a look at it, had to assess it, but that noise right now has almost went away. Like, we're not hearing it, and we're certainly not seeing any of our significant established agent base making the move. So when we think about the market, there's 1.5 million realtors. Maybe it drops down to 1.1. Our goal is to get to 200 to 250,000 agents over time in the United States as sort of our number. And we know that not everybody's going to be with us. So even if there are other models out there, we're still going to be able to get to a pretty large number.
I think we only had really 30 minutes for this, and we went over by a bit. Is there anything that we want to wrap up with? Any closing thoughts before we meet everyone again at earnings sometime early next month?
Well, I would say, for, investors specifically, since this is an investor call, if you do get a chance to come out to our shareholder summit next year, that, in my opinion, is a place to really understand the enthusiasm for the model and understand why we're continuing to actually garner the market share that we are. I think there's a lot of misconceptions as to who we are and what we do. But once you get into the ecosystem, it's hard to deny that we have a special sauce that's pretty special at this point in time. So I would just encourage anybody that can come out to our big event, and that's going to be, I think, in May next year, to just start to think about coming out to that event.
I think when I heard this time, and I think it was perfectly said when they talk about, our company's collaboration versus competition. When you look at a lot of our competition, they're competing against each other. And if you were sliding this stuff on the stage, it's incredible how this company are helping each other to get to the next level. And I mean, I haven't seen anything, but it's actually become more positive from a cultural standpoint at this EXPCON. And you're here, you can see it. So really, very pro in terms of how this is going, and that organic growth model it's humming. I mean, there's going to be challenges for us, obviously, but the attitude is fantastic. It really is.
Great. All right. Thank you. Thanks everyone for coming.
Good.
Thank you, Gene.
Thanks.